excuse me for that. Now today's topic is how to use Fibonacci ratio, and we are going to apply that in the case of Nifty, Bank Nifty, and some stocks. Now here is a small slight adaptation that we are doing, and sometime previously also in webinars we have expressed of how to use the Fibonacci ratios, because one is that understanding the Fibonacci ratio, then its application, because then in that case it opens very many possibilities of identifying trend, then the support resistance levels, projections, and so you really enjoy your trading, and probably you will be more successful, and probably you can also combine this with some one or two other indicators, right? Probably it could be a moving average, or it could be important support resistance levels through the pivot point identification. So Fibonacci ratio already, Fibonacci ratios, we already know about it, and most of you are aware that the numbers are very much clear. That is 1, 3, 5, 8, 13, and it goes on endlessly. So this is one. And more important applications generally comes in terms of ratios. So this is what we have seen: 0.235, 0.386, 0.618, out of which these are two important ratios, 0.765. Now this 0.5 is not a Fibonacci ratio, but nevertheless traders use this 0.5. So similarly on the upside, after 1:1, use 1:1.235, then 1:1.386, then 1:1.618, 1:2. So these are on the upside for projections which are generally used, and also in terms of percentage ratios are also used. When I say percentage ratios, it is like this. That is generally 1.4%, 2.1%, 3.5%, then 5.56%, then 8.9%. Then comes the 14.5%, then 23.5%. So these are all the other percentages in terms of using on the absolute number itself. When I say an absolute number, it's just used on 18,500, 17,500. So exactly on the numbers itself, instead of finding out the difference, you use it on straight away on the overall numbers itself. And one magic number which we have already identified is that normally smaller corrections in market ends up at around 5.56%. Smaller corrections in the market ends at 5.56%. In the sense there is no big reversal. And then comes the 8.99% correction. Now in this entire move of Nifty, that is from the pandemic low of 7,500 to this 18,600 levels, and this 11,100 levels, there are 2-3 times when it had a correction of around this. It did not go much below this 8.9% correction on the downside. So a couple of times, 2-3 times in this entire move, it had a correction of 8.9%. And this 5.56% is another important correction, and this time the correction which took place 1,000 points from 18.6 to 17.6, exactly the 1,000 points corresponds to almost this 5.5% correction. So generally when it comes closer to the 5.5%, and then when it looks like rallying, then in that case, it is a very important place where probably you should look towards considering your investment decision. Now we will first see that application in Nifty. Now let's go to the Nifty chart, and let's look at this Nifty chart. Now whether you apply from the close basis or whether you apply from the high, is 18,600, 18,600, 17,600. The 1,000 points in a 18,000 represents something like a 5.5% correction. So now that having taken place, now look at the market formation, now which we have already said. So I said that you try to combine this with some other important support resistance levels. Now look at the formation here. Now you got a top here, then you got a bottom here, then you got a top here. So this means a higher bottom, right? So compared to this bottom is higher. So the movement, you got a 5.56% on the downside, and once it starts to climb even above 17,988, then generally the trend can be on the upside. So here itself, if you are not willing to purchase here, then probably this high break should have given you the positional trade to be long in the Nifty. So it is 18,000 on odd level. So even now it is not very far off. So I think you can consider going long in Nifty from here. So the stop loss of course comes here is that it should not go below this particular close, which is 17,873. So this time also if you see, this was close of 17,829, and there was a small swipe below that, but no, the close was much better, 17,873. So the close should not be below 17,830. As long as it holds above 17,830 on a close basis, this swing can carry it on the upside. This swing can carry it on the upside. Now, so this formula of 5.56% or 8.9% generally holds for indices. There is no 5.56%, 8.9% and all. Bank Nifty being a little more volatile compared to Nifty. So normally if this is 5.5%, Bank Nifty can easily become 9%, 10% on the lower side. And stocks can also become 10 to 11% on the lower side. So because they have got almost a volatility which is almost more than double the Nifty, so there the ratio may be slightly different. Now, in case of Nifty, you can keep this particular ratio as an important one. And another thing is that you can also look at the Fibonacci retracement. So one of the important other things is the Fibonacci retracement. Now, one thing that we have always noticed is that for a trend again to resume, that is for, let us say now it is So now let's say the price goes from a particular level to this level, okay, then it has a retracement, okay. Then when do we know that this retracement I think is over? When we know that the retracement is over? In the case of Fibonacci ratios, what I do is that if this has corrected, if this point has corrected more than 23.5% of this particular difference, let us say this is 100 and this is 150. So 50 into 0.235 is approximately 12 rupees or so. So let us say it's 138. So this has corrected itself to something like 125. 125, which is almost a 50% retracement. Let's keep it like that. If that be the case, then what we should do is that this should go from 125, it should cross 137 or 138 levels for it to resume its uptrend. Because if it has already corrected by more than 23.5% between these two, one low and another top, then in that case, it has to again from that particular bottom of correction, it has to cross the same number for the trend to be established. That means here in this case, it's a 50 rupees into 23.5% comes approximately at 12 rupees. So 12 rupees you add on 125, it comes to 137, 138. So once the price starts crossing about 137, 138, we can presume that the market trend is going to be in the upside. Okay, so this is another way of applying the Fibonacci in a little more innovative manner, and it will give a great amount of confidence. Now let us say the same thing as far as Nifty is concerned in the present case. Now let us say which all areas it had. See, this is Nifty, and let us say this from this bottom to this bottom. Let us say whether how much, what is the Fibonacci correction? So it has corrected a little more than 23.5%. So the 23.5% from this particular low it has come close to 17,858 should have been the low. It went 200 points on the lower side. So that means this particular place. So this is what? Say this is the 17,950, right? So this is 17,968. It should have held on. It should have held on to the 17,850 levels. Now, since it has failed around the 17,850, now if that is a rally here, what it would probably happen is this 17,850 to 18,600 is approximately 750 points, right? So 750 points. So this 750 points you add to 17,600. So there is a chance that probably around 18,350 levels or so, there can be some sort of a resistance. So it has to literally cross that particular level for us to get further momentum on the upside. Now, if you see the here, it's 18,000. There is also a resistance, 18,340 or so. So the next resistance will come very closer to that 18,340, 350 levels, because that is also the 23.5% retracement from this low to this top, the retracement is approximately 750 points, because it should have been 17,850, 18,600. The difference is around that 750 points, right? So the 750 points from the bottom, it comes to 18,350. So it has to clear. There will be one important resistance closer to the 18,350, and it has to clear that. So that please keep in mind. Then second, let us look at any other place where probably this place has not been taken off. So luckily, if this had been taken off, then we would have been into greater trouble. 23.5% retracement of this. See, this low to this top. Okay, exactly 23.5. So it just touched closer to 23.5%. It did not go below that 23.5% retracement. So this was the important low from where it has crossed its 23.5% retracement, which means that we need to look at some sort of resistance coming closer to the 18,340, 350 levels, and it has to clear 18,350 for it to literally get on the upside, to build its momentum further in the upside. Now on the bottom side, if you see, this was a collapse of approximately 1,000 points, right? 18,604 to 17,613. So when do we know that this bottom has when do we know that this particular bottom has taken place? So in that case, it has to move approximately by 240, 250 points from the bottom at least, right? Because from this particular top to this bottom, it should not be more than 240, 250 points, right? Because now if you see this place, 18,604 to 17,000 is approximately 1,000 points. So now 1,000 points into 0.235 comes to 235 points. The 235 points means 17,610 plus 235 points, it comes to 17,845, right? It comes to 17,845. So once that 17,845 level is crossed, okay, then from any top to bottom, okay, from any top to bottom at this point of time, it should also now fall only by 245 points on a close to close basis at least. So let us look at this particular close. So this was a this particular thing was 18,012. So it has crossed at 17,850 points. So 18,012 minus 240 points. So 18,010 minus 240 points. I'm just putting it at the top, but it should be on the close basis. So 17,770 or so approximately. See, it is that close is much better, right? So similarly, the same thing. Now, if you apply on this close, which is 18,068, 18,068 minus 240 points or 235 points, should be 17,830, 233. So that's where the close should be above that. So there can be always be a spike below that, but you just see the close, it's 17,873, 873. So what we are now looking at is we should not get a dip which is on a close basis more than 235, 240 points, which means probably then in that case a deeper correction can come. So what you should do is that you should now look towards a long and keep a 235, 240 points as a trailing stop loss. The moment it starts moving on the upside, keep a 240, 245 points as a trailing stop loss for Nifty. So that will enable you to get out of the market at an early stage. Okay, if there is a bigger fall to take place from some top. So right now we are looking at this particular thing to go up and cross 18,350 and 18,350. And then subsequently scale 18,600 and upside. This is purely from the technical point. We are not calling it from the fundamental point or whatever it is. Now, the chart looks to be bullish and it is confirmed by higher top, higher bottom. Now, it is above the 150 moving average. Right now, it should be. And now the resistance can come closer to 20 moving average. We are not plotting it right now because we are talking mostly on the Fibonacci side. And from the Fibonacci side, I think it has crossed the 38.6% retracement of this particular fall also. So combining all these things, we should be looking towards slightly literally a bullish formation right now. And So now with this formation, now see you can have what are the important tops that will come after this 18,350, then 18,600. Then after that, what will come? That you use a Fibonacci. Now the difference is 1,000 points, right? So on the top, 1,000 into 0.235, 1,000 into 0.386. So that means you can clue 18,604 plus another 235 points, 18,835. So you can make a projection like this. So if the tops are 18,350, 18,600, then 18,850. This is because 1,000 points into 0.235, which is 235 points. So this you add it on 18,612 or so. This should come closer to the 18,650 mark, 18,850. Then 38.6% retracement on this, 386 points. So 18,986. Okay. 0.618 is another fantastic thing, which is it should be 610 points, 618 points from the top. So then it will come to 19,200 plus. So these are the expected range. So once one certain level is crossed, then you keep other level as a support or resistance. Now we have also let's look at the situation here. Now from the top to bottom, let's draw the Fibonacci. So I told you that once this 50% retracement is crossed, which was 18,090, then you leave the one level below. That is 18. If 50 level is crossed, then it should halt at 23.5% on any correction. That's another way of looking at it. So here is the thing that once it has crossed that 50% retracement at 18,090, any dip we should expect that to be supported closer to this particular level. We should expect this to be supported at this level. Now, if it is going to 61.8%, which is 18,206, then 18,360, 370. If it crosses 18,206, then automatically we keep 17,973, 17,975 as an important place of support if it crosses 18,206, which also incidentally happens to be the 230 points, 235 points gap. So the moment it starts going above 18,206, kindly keep 17,793, 973 or 970 on a close basis, as a stop loss. So Fibonacci helps you in identifying very clearly what are the levels of support, how the trend is, and what are the where you should go for a buy. Okay. So now let's look at the other scripts. Maybe you can look at the Bank Nifty. We can look at some stocks also. Then we will look at the commodities and all later. So most important point that we have emphasized in the last 20 minutes is that 5.5% retracement in Nifty acts as a very important level of support whenever there is a fall. Then major next level of correction comes to around 9% from the top. Then only comes 14-15% of correction. These are even 14-15% correction doesn't come that easily as far as Nifty is concerned. Over a period of time, if you look at 10 years history also, you can look at how many times that more than 15% correction has come. So there could be incidents of 4, 5, 6 times in entire 10-year period that would have got some corrections like that. Otherwise, you should be content with a 5.5% or a 9% correction. So level of investment support should be 5.5%, then 9% also. Then if it falls further, then you should be in a position to add more. So this is not only as far as Nifty is concerned. Even if you look at S&P 500 also, 5.5%, 6% correction is where the first amount of support holds. So we'll just look at that, because in order to give you a perspective of confidence, that is US S&P 500. See, last time, okay, so this is correction 45.35 and 45.35 and 43.55. So 200 points approximately. But 200 points in a 45.55 is approximately 4 to 5%, right? So it's a 5% correction. So normally this 5% correction will hold most of the time. So now also if you get from 4,000, it is closer to 4,700. So 4,700 into approximately 5.5% or 5%, 4,440. So now the support will come above 4,440. So that means it can have some dip below the 4,545, but unlikely to really get below this. This is the wave one of big thing. So 44, 29 and 30. So this is going to be a place where the stop loss will be there. So any correction is a buy as far as US S&P also is concerned, as long 4440 is not broken, which means probably there is something drastic that is going to happen in the market. So just we can watch out for that particular reaction. So this is just to illustrate that how important that 5.5%, 6% correction happens. So the same thing, if you look at this particular year, is approximately a 200 points correction, right? So the 4278, 4300. So 4300, 45, around 235 points. So 235 points. Now, if you add this 235 points on the upside, 45, 45, 1:1 it has come, plus 235. It comes to 4780. 4780 is approximately that 235 points. So it has come up closer to the 4720 levels. 4720 levels. So now it has broken 1.618. 1.618 times of this correction, which was approximately 240, 250 points. So you can now look at the 240, 250 points. 45 minus 4275. This is only for registration gain. So approximately 270 points. So 270 points into 0.618, that comes to 166 plus 45 here. That comes to 4711. Exactly, it's 1.618%. 4711. So since it has crossed at 1.618, you can keep 1.386 as the important place of support. So that means 270 into 0.386 plus 45, 4649. So the first support, now if you look at it, will come closer to the 46, 49, 50 levels, close basis. See, 46, 46. So if there is going to be a further fall below 46, 46, 46, 47 level today, then probably we are going to add a little more on the downside. So that means it will become some sort of a sell below 46, 46 on a close basis with a stop loss above 47.10 level. Because one level of Fibonacci being broken, then the other level becomes a possible support. That's what we illustrated before. So now since it has gone to 1.618, 1.386, 1.236 can become a support, which means 270 into 0.235, 63 points. So 45 plus 63. So we are expecting 46.08. So the next support for this is going to be around 46.08. So this is the level. So probably we may expect something down towards the 46.08 levels. So it's a clusteriness. Let us look at S&P, a fall up to 46.08. So any fall much below the 46.08 probably can trigger even a bigger fall. So we'll keep 46.08 as an important level, because it went up to 1.618. So the next Fibonacci was 1.386. Then the below was 1.235. So since it broke 1.386 and it reached 1.618, now we are keeping 1.236 as a so on. Huh? Okay, so there were some technical issues, glitch. So now one Fibonacci level being crossed, keep the next level as an area of support. If that is broken, then keep that as a stop loss. So this is the very simple application which we try to illustrate both with Nifty and S&P 500. Now we will look at Bank Nifty now. So Bank Nifty, very important level of support this place. I think you see there's 38,425, 426. Let's say why it is an important level of support. Now let's look at from this bottom to this top, what is the Fibonacci ratios. See now it went it has come closer to the 61.8% and probably dipped close between 61.8% and 78.5%, right? So now after it dipped down below 38.2%, 61.8%, any rally towards the 38.2% would have met the resistance, which is closer to the 39,935, 940 levels. And that day it went slightly above, but the close was 39,935 or so. So very closer to the 38.2% only, it has stopped. So right now it needs a close which is above this 39,935, 940 levels for it to start the uptrend. So that is a very clear visibility right now as far as Bank Nifty is concerned. Now let's see whether any other place where this 23.5%, any other break that has taken place. Now let's look at from this is an important low. I think there are so many important lows, but I think probably we can identify more through the weekly chart. So this is place where we drew, and probably let's look at from this particular place. So now you can see the Fibonacci here. This one also from this particular place. Okay, the resistance that was broken was the 50% retracement came to 38.285. That is where it came and rested. This particular move. Once it started to move above that, then we have got a 40,150, 140, 160 where the resistance came. So when we drew from two important pivot points, we got one closer to 39,925.30 on a close basis. Similarly here 40,167 even on a close basis, but the high went spiked higher, but it had a fall from that particular level. So very clearly that this is the place where the resistance has been seen, and since this particular level is holding right now, we should expect some sort of a, first of all, this is a weekly basis, so we there was some support. If you see, it came down to 39,120, and then there was some spike from 39,120, it went up to 39,573, and then once it cut the 39,120 again, it had a fall. So now the expected resistance will be the same 39,120, 130. Then after that, if it starts to move above that, then in that case it will come closer to the 40,167. So there are two ways of playing this market. Okay, how? One is that we now know that there are 3 weeks where it has not fallen below the 38,285. So here, if it starts to again move about 39,125 on a close basis, you can go long keeping that 38,285 itself as a stop loss, because otherwise you have to wait for some bigger up move. So yeah, we can just expecting that the last 1, 2, 3, 4 weeks it has not gone below that, and this particular fall seems to have got a little bit stabilized. So what you can do is that, and this being an important low, we can keep that a low as a stop loss, and instead of trying to go above long above 40,167, we can try above 39,125 itself, so that we are near the 600, 700 points from for Bank Nifty is around 2%. We just like the Nifty getting it from the bottom by 1% or so. So clear case where the Fibonacci is going to help you to identify where you should go for a long. So let's go back to the daily chart there. So there are so this particular low 39,304, 39,120 or so we said where probably there was some place. Okay, this is the place. So this place, if it starts to move above this 39,120, 130 levels, we can definitely look towards going on the long side if there is a close which is below, which is above that. So this way Fibonacci helps you in identifying, and let's see whether there's some other Fibonacci thing that has come, which can probably from here. See, we have run through the weekly basis, and we have run this particular from this low. So this low also is we can see. So here it has come. There also there was a resistance close at the 40,026. Since the 38,870 was cut, it moved up to 40,025.26. So the multiple resistances through the Fibonacci coming close at the 40,026, 39,950, 40,170. So we could have taken the upper range of the thing to know that maximum resistance could have come up to that level. So that is one way of playing for that. So let's. One thing is clear: if it's going to cross this 40,160, 170, definite bullish momentum is going to be there. But if it is, should we wait for that? Should we even go above the 39,120 or so? I think that's a call that we need to take and put in a stop loss below 38,825 or so, 38,825 or so. Because now we know that which Fibonacci has been a little more effective. Because more than this, we know that probably this particular Fibonacci has been more effective in this, because we draw this and we know that no, this is working properly. Now let's say this one. So this Fibonacci is because it stopped exactly at that place. It went up and got the resistance, all those at place. So in case if it's going to dip below 38,306, there's a greater chance that it can come closer to 37,450 or 460 levels. So let's look at this particular Fibonacci right now, which we have drawn from this particular point as a guiding factor, and look towards whether we should be going long about 39,150 or so itself. So this is as far as Bank Nifty is concerned, and we can use the same thing for some stocks also. So let's look at some stocks. TCS. So TCS, this is a weekly chart. So let's look at the weekly chart and see where all resistances will come. So now, so here if you see, this is one, but in some this one, this is not held on properly. So probably we'll look at some other Fibonacci ratios. Fibonacci this one, whether the fit has been much more proper with some other Fibonacci's. So this is a little more better, because now so this is the 69 for this particular place. It came to 3371, and that is where it is holding. So that means now the resistance, since it has come up to this, we can expect some resistance going at this level, which is 3608. This is 3608. So TCS, once it starts clearing 3608, it will be on fire. It will be on fire again. So whether we want to wait for that to happen, now since this place itself has been kind enough for the 61.8% retracement. So what we can do is that we can keep this itself as a stop loss, because this is an important bottom, keeping this particular high where it has taken some support. So we can even keep this low as a stop loss and go for it long. As far as traders is concerned, investor definitely considering that there's been a fall, which is 3385, and this high is 3989. So you got something like 600 points. 600 points on a 4,000 is around 15%. That is 14.5%, 15%, which is what I told you is an important level. So now that has come to that, I think we should be okay with that, and we should now look towards buying TCS. Now I told you that one level, if it is broken, the next level that should be bought. then we should look at 5.5, 8.9 and 14.5%. So 5.5% on this is going to be around 200, 250 points or so. So that means 250 points from 4 to 4 is going to be 3750. So that is what we are expecting, that probably, this is 3750 where it is resistant. This is 3608. So we don't need to wait much above 3608. So once it starts to cross 3608, I think we should definitely look towards buying, because then we will know on any dip it has to be bought. On any dip it has to be bought. So we'll keep that, and otherwise we can also look at it the reverse way also. So let us say Fibonacci from this place to what extent it has crossed now. Now it has not crossed 38 point. It should at least cross, if it crosses 3689, then in that case any dip towards 3525 can be bought. Then we will know that the bottom has been formed, and so the support should come at 3526. If it crosses 3617 itself, that is crosses 3620 itself, that's what I told you from that point also. If it crosses 3620 itself, for some reason or that, we will know that this bottom has been formed. So anything above 3620, after which if there is a dip which comes down even to 3525 or slightly below, I think we should look towards buying that. We should look towards buying that. So just watch for TCS to cross 3617, 3618 levels. Okay. Now we will look at some other stocks. Reliance. So this is a weekly chart, so we have got a huge rally. So Reliance is definitely on the buy side, because one reason is it has crossed a weekly high. It has crossed a weekly high and the trend is up on the weekly chart. Right now we know the trend is up on the weekly chart. So let's dot the Fibonacci and find out where we can go for a buy now. So now it has come up to 50%. So any dip which is closer to 25.25, now it has gone up to 25.93, right? So anything which is a dip towards 25.25 is a buy. Anything which is a dip, if you get next week Reliance closer to 25.25, we can go for a long, keeping 24.58 as a stop loss. So 25.25, keeping 24.58, will know, at least for investment purposes, you know very well that it has bottomed out and there could be some steam on the upside. So Reliance is a buy based on the Fibonacci, because it has cut the 38.6% retracement. First of all, from the top to bottom, the 38.6% retracement has been cut, and it has moved up to the 50%, which means that any dip which will come towards 23.56, 23.6% will definitely be a buy. Will definitely be a buy. Okay. So now let's look at this one as a buy as far as Reliance Industries is concerned. At some level which is which is closer to the 25 level. So that is as far as Reliance is concerned. So let's look at some other stock. Probably let's look at Tata Steel and Tata Motors. The Tata Steel has become a very clustered case here, and let's apply the Fibonacci and see. One is that let's draw from this bottom, some important bottom, and let's consider this as an important bottom, and now it came below this, right? It came up to this. So any level which is above this itself is a buy. So that's what happened. Anything which is above 1339, 1340 was a buy. 1339, 1340 was a buy, keeping this particular low as a stop loss. This low as a stop loss, okay, which is 1232. So any dip from 1339 towards the lower side was definitely considered to be on the buy side. So even now, I would say that this particular low, but it went up to 61.8%. So I think probably this particular thing now it has started to cut. So I think Tata Steel doesn't look that nice, but any further break which is below this particular low, I think Tata Steel needs to be avoided. Now this is based on this Fibonacci that was drawn from this, and let me draw from I think probably we will look at from this particular levels. So now you can see this 38.2%, 1346, so it went up. and it went up to 61.8% retracement. It went up. So the moment it went up to 1418, 1345, 1346 itself becomes a trading stop loss. So that the moment it went up to that place, 1345, 1346 was taken off, then we should have probably exited this particular trade. So right now, Tata Steel, from the point of Fibonacci, from top to bottom, it is a trade which is a neutral, which is considered to be neutral because it has not broken this bottom. So those who want to look at a bigger picture probably can trade keeping this low as a stop loss. Those who are looking at a slightly conservative stop loss and tighter stop loss, once it went up to 1418, you should have pulled a stop loss back to 1345, 1346, and you should have made an exit. So Tata Steel is not looking that great right now for the time being, because it looks very clustered, and there is no big trend that is emerging out of this particular stock. So we can look towards avoiding Tata Steel for the time being. Now, going by our own logic of placing it on the so let's look at from this low, whether it has cut 23.5. Yes, this has cut 23.5%, right? So this has cut 23.5%. So that means this high, which is 1534, and this low is 1310. So around 230 points. So if at all, the low here was 1232. So 230 points is where we are expecting. Definitely, if it goes up, it will have a resistance. So we should have expected that since it has cut this particular 23.5% retracement, we should be very careful as far as Tata Steel is concerned, expecting that 1450, 1460 can be a resistance, because from this level, if you see what is this level, this is 1534. 1534 minus 1310, 230 points, right? So 230 points from this particular low can always be a very important resistance. This is 1450, 1462. It came to 1424, 1430. And probably is still struggling. So Tata Steel requires a definite clearance above 1425, 1430 levels before it could really establish, for the reason that it has broken a 23.5% retracement of this low to this top. So anywhere if you have seen a break which is below the 23.5% retracement itself, be cautious. So you look at from various pivot points that where all the Fibonacci ratios are getting cut. If that be the case, any rally, keep on estimating that probably this could become resistance, this could become resistance. So you don't need to be really bullish for Tata Steel till this particular level is crossed. But having said that, if you look at for a trader, probably you could have gone long over this. You could have kept this low also as a stop loss. Now, if this gap is going to be quite big, then we should probably use the Fibonacci ratio from some other place, or from this top to bottom we should have used it. That's all, right? Or otherwise we should have used an absolute number. Now let's say 1534. 1534 into 0.145 is 222 points. So 1534 minus 222 points, that comes to 1310, 1312, and that is where probably we saw some resistance there approximately. So then 1534 into 8.9, that comes to 136 points. So 1534 minus 136 points, that comes to 1398. 1398. Then for 5.56%, 1536 into 0.945, that comes to 1450 or so. So since it broke that 1312, we should have expected that probably 1450 levels, it's not going to be that easily broken. Okay. So 1450 we should keep as an important level, but probably you should find it difficult to break. So that's how we normally do the trade. Now in the case of Nifty, it came down to 5.5 points, 5.5%, right? So it has to rally at least 3.4, 2.1%. So that means since it has come to 5.5%, 2% from the top, which is around 373, 400 points. So 18,600 minus 370 points, if you take, that comes to 18,220, 230 levels. So that's a place where probably we can see some sort of a resistance, first resistance coming as far as Nifty is concerned. Now it's around 18,100 plus levels it has gone. So 18,220, 230, if it breaks, then probably you can say that it has comfortably crossed even higher levels of this one. So this way, using the Fibonacci, you can look at what are the levels that needs to be crossed before you can be much more confident about what you should do as far as the buying is concerned, and also putting your estimated stop loss and profit target. Now, before you wind up, probably we'll look at one more script. Let us see ICICI. So ICICI now has come down. So let's, in this particular case, probably we can use the absolute numbers. So absolute numbers we'll use on the close basis now and see what happens. This is on 841, right? So 841 is the this one. So 841 into 0.945. So 841 correction. We look at bigger correction. 844 into 0.95. 841 into 0.991. Okay, 9% or so approximately into 0.855. Okay, let's look at these ratios now. So 841 into 0.945. This is 795. Okay, 841 into 0.91. 765. Then 841 into 0.845. Normally this should hold 710. So let's look at where exactly so 766, right? So now it has come to 765. So what will happen is, now this broken this 5.5%. So one resistance that will come close is 795. But one thing which is above the 5.5% will come into play. 841 into 3.4%, which is 966. So let's look at this particular one. This is 812. So there is a possibility that ICICI can rally and meet some resistance at 810 and may require a clear above 810. Now, since it has come down up to 765, we need probably let's look at this 810. So we will keep one level as 810. Of course, another level is 795. See, this is 795, 793. So when it just moved a little higher towards 795, it had a resistance. So either we can look at 810 or 795. So if you get something like above 795, you can buy keeping this low as a stop loss. Then if it still crosses of 810, you can add to ICICI strip. So that's how you normally keep on looking at it. And if there is going to be a bigger fall, probably we may get some support close to 710. Now let's look at the 23.5%, which level it has cut. So this has cut now, so that means that this is 23.5% retracement, 786 to 865. So 79, approximately 75 points. So 75 points, when it rallies from any bottom, it will meet some resistance. So 75 points on 766, it will be 835, 840, whatever it is. So there will be some resistance now closer to the 841, because that's the probably as we have taken on the high, but on a close basis, this is perfect. This is 23.5%, right? So now we will look at probably from this level on a close basis. On weekly basis, we'll go and see which week we should use. And so we will use probably from this week. First was 807, 807, and then 38.2, 770. It has come closer to that. Next is 740. So we should expect probably 866 to 807 is around 59 points, 60 points. So now it has come to 770. Probably we can expect resistance coming closer to 820, 830 levels. So ICICI as will meet some resistance, probably closer to the 820, 830 levels, and it has to clear that before we can establish itself on the long side. So that's how normally look at it. That is why if one level is broken, then next level becomes a support, and the resistance to be broken again for us to look towards going on the long side. Reverse is the case as far as the short side is concerned. So using this Fibonacci from various multiple points, you will come to know that if there is a fall also, whenever there is a rise, what are the levels where it will meet its resistance? One. Second thing is, you can use the absolute numbers, and also on that you can use the ratios like 1.4, 2.1, 3.5% you can use. Third thing is, you can use from various important pivot points to the last pivot high. You can use the Fibonacci on the difference and then use it. This you can use it combined with some indicators like moving average will give you very, very finer points for entry and exit. So you can now ask your questions. Thanks for the participation. Again, my apology for the delayed coming because of the rains. This application we will see on commodities also next week. So thanks for your participation. So all these things for beginners may look a little complicated, but when you use this, you will enjoy it. Thank you.